Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into Principal Credit Real Estate Income Trust latest report. And trust me, it's more exciting than it sounds, or maybe not, depending on your tolerance for financial jargon. Let's just say we'll see if this trust is building castles in the sky or just houses of cards. This report is a current report, which means it's letting investors know about important events that have happened recently. The most recent event happened on April 4, 2025, so let's see what's been going on. The main thing this report is about is the sale of some of the company's stock. Specifically, it talks about unregistered sales of equity securities. That basically means they sold shares of the company in a way that didn't require all the usual paperwork with the Securities and Exchange Commission, the government agency that oversees the stock market. This sale happened as part of an ongoing private offering. A private offering is when a company offers its stock to a select group of investors, not to the general public. It is a continuous offering, which means the company can keep selling shares over time. On April 1, 2025, they sold more shares. The company issued or created and sold at 53,520 shares of its stock. These were common shares, which means they give the owner voting rights in the company and a share of any profits. For these shares, the company received about $1,145,000. That's the total amount of money investors paid for the shares. The company says that they didn't have to register this sale with the SEC because it was exempt under something called Section 4 HEM2 and Rule 506 of Regulation D. These are parts of the law that allow companies to sell stock privately without all the usual registration requirements, as long as they follow certain rules. Let's break down the specifics of this stock sale. The shares sold were Class FI common shares. The company sold $53,525,000 in return. That means each share was sold for roughly $21.2443 of these shares. And they got $1,145,000 in return. That means each share was sold for roughly $21.47 in return. That means each share was sold for roughly $21.45. Now let's step back and look at the bigger picture. The company Principal Credit Real Estate Income Trust is a real estate investment trust, or REIT. REITs are companies that own or finance real estate. They're often seen as a way for investors to get into the real estate market without directly owning properties. What this report tells us is that the company is continuing to raise money by selling its stock privately. This could be a sign that they're looking to invest in more properties or expand their business. It also means that existing shareholders' ownership is being diluted as more shares are created and sold. So what does this mean for the average investor? Well, if you're not one of the select few who get to participate in these private offerings, it might not mean much directly. However, it's always good to keep an eye on how a company is raising money, as it can give you clues about their future plans and financial health. Is the company actively seeking outside money, or do they mostly operate using their own profits? Looking at Principal Credit Real Estate Income Trust in general, they're operating in a pretty competitive market. There are a lot of other REITs out there, all vying for investors' money and real estate deals. For most real estate investment trusts, it is especially important to see occupancy rates. Real estate only makes money when it's occupied. Overall, based on this report alone, it's hard to say definitively whether Principal Credit Real Estate Income Trust is a great investment or not. However, the fact that they're actively raising capital suggests that they see opportunities for growth in a real estate market. That said, it's crucial to do your own research and consider your own risk tolerance before investing in any company, especially one in a complex and competitive industry like real estate. One thing that might be a risk to keep an eye on is the rising interest rates. Real estate is generally considered a safe store of wealth, but it's less enticing when interest rates are high because other investments like bonds become more appealing. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more insights into the world of corporate filings. Until next time, keep decoding.